This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Later on in the show, we'll have Curt Kimmel of agmarket.net for the closing market summary. But to kick off today's show, I'm talking with John Brien, an AgriGold agronomist, about the lessons learned from 2025 harvest and how we can apply that to next year's crop. And a lot of things to think about for next year when it comes to seed choices. I know there's a lot of excitement with the AgriGold seed lineup, especially when it comes to next year, that yield gain as well. Why is it important for farmers to diversify their seed choices, especially as we head into a year followed by a really interesting crop year this year?
Yeah, so every crop year is going to be different. We don't know for sure what that is. We don't have a crystal ball. But when I think about why should a grower think about diversifying their genetics, there are really three big things come up when I think about that. The first one is weather. The second one is disease. And the third one is grain fill periods. So how does that fit? So when you think about the weather, each year's weather pattern influences performance differently. Some weather patterns will amplify genetic strengths. Those are the plot winners. Those are the top products on a farm. But then other weather events will actually expose some limitations, and those are products that have challenges. Those aren't bad genetics, they just had the wrong environmental interaction. When you think about disease, wow, the disease severity has increased greatly. The disease has shown up earlier and has caused more problems. So having different genetics that handle different diseases is extremely important. And the last one there is grain fill duration. We don't think about grain fill duration at all, but if a product is a long grain filler and has a dry August, we can really negatively impact the performance of that product. So having a nice mix of genetics is really what we're striving for.
And I know that there's not like a magic number for every producer to look at when it comes to the varieties that they should have on their farm each year, but in general, how many different corn hybrids should farmers select each year to kind of have that comprehensive control?
Yeah, that's a great question, but it's a very difficult question to answer because every operation is different. So the way I view that from a big scale is success is not really associated with a number of hybrids, but really success is having the diversity within that lineup. So if you have 3 products that are genetically diverse, that might be good enough. Likewise, if you have 4 products that are the same basic genetics, boy, that's not a good mix. So it's not number, it's the diversity.
And then when we look at those AgriGold products that are kind of a highlight for next year, like I mentioned earlier, that yield gain for this 2026 seed class is something to highlight as well. But of those products that we could see farmers looking at next year, what would you recommend for them to keep an eye out for?
When you think about especially the Iowa group this year, our new product A63891, it's a 108-day product, really rose to the top when it came to test plots and in farmers' fields. And you might ask why. Well, 1, the genetics are really good, but 2, it offered that plant health, and it offered the ability to be resilient through those difficult stress periods. And that's really what we at AgriGold are trying to develop, products that help growers be successful through those diverse programs. And 63891 really rose to the top, and I expect that to be a top product for years to come.
And again, we are here with John Brien. He's an agronomy division manager with AgriGold. Moving on to the insights that we can take from this year and apply it to next year. What are some of the top agronomic lessons we learned in 2025? I know Southern Rust is kind of one of those big things this year that we dealt with, but are we going to deal with it next year is kind of the thing.
Yeah, so the 3 takeaways that from this year is, first one you mentioned right there, plant health matters. We saw this year growers who were able to manage plant health from beginning to end saw a tremendous yield advantage. And those growers that struggled with that not only struggled in the yield standpoint, but also from an agronomic issue standpoint. So plant health matters. The second one is stick to your plan. You build a plan for a specific reason. And what I see growers do is they hit that first stress period, that first dry spell or that first cloudy spell, and growers begin to go into panic mode and want to throw away their plan. Well, you built that plan for a reason, and it's going to help you meet your farm goals. Stick with that plan. That is so, so critical. And the third take home, again, shows us again, start early. We had a beautiful early planting window in a lot of the country, and those crops were the best crops on the farm. Year in and year out, that gives us the best opportunity to have what I call input-free bushels. We're not changing anything, we're just planting it early, give that crop the most chance to be successful.
And then when we look at those scouting notes for next year, crop scouting, probably an underrated impact on your crop season. But when it comes to getting those notes and data and improving in 2026, first off, how do they plan for that for next year? And then how do they apply that to that crop plan?
Yeah, so your data that you collected, whether it be crop scouting or yield or whatever data, drones, that is a gold mine. And why that's a gold mine is because it tells you what went well. It helps explain what didn't go well. So what's interesting about your plan is the components that build yield. They don't change. But really where success is found is when you fine-tune those different yield components. And we fine-tune them with the data that we collected. And when we collect that data, we apply it to our yield building criteria, and we build a much stronger plan for next year.
And then one last thing, when it comes to those things to look out for the crop season, what's the most common agronomic mistake that you see from farmers that they could avoid next year?
Yeah, I'm going to go back to my earlier conversation. Growers give up on their crop way too early. I have seen this year in and year out. They have a fungicide application planned, but it's dry at the moment. Growers said, I don't want to spend the money, it's too dry. They don't apply the fungicide. 2 weeks later, they get rain, the crop is beautiful, and disease eats them up. So don't ever give up on a corn crop, whether that's June 1st or August 1st. Stick to the plan, give everything that you can to that corn crop to produce the crop that you need in order to pay your bills.
All right, John, lots of great information today. For anyone who wants to get in touch with their local AgriGold agronomist and check out that seed lineup, how can they do that?
The best place is www.agrigold.com.
Thanks again to AgriGold agronomist John Brien for joining us on today's show. We'll go ahead and take a look at the closing markets now. And for that analysis, I'm with Curt Kimmel of agmarket.net. First off, Curt, on this Friday, what do we see going on in the grain markets?
Oh, red on the screen. Corn finished down 0.5 to 2 cents. Soybeans 11 to 14 cents lower. And the wheat market down 4.5 cents. On the weekly chart, corn is down 2 to 4 cents. The beans down 25 to 30 cents on the week. And the wheat market down 1 to 4 cents. So we kind of saw some technical selling interest. The soybean chart's kind of toppy looking in through here, so technically not a whole lot of good news. Fundamentally, thought we'd get something going. Saw a sale of 462,000 tons of beans to China, but evidently it wasn't enough to keep the bull happy here, so down we went. So kind of sloppy trade here finishing out the week. The big news is going to be next week if we see some numbers outside of what the trade's looking for, that monthly supply demand report.
And as we look at that WASDE report coming out next week, what are some of the things that we might expect to see in that? I know that there's not necessarily a ton that usually comes out in the December report.
Yeah, whether they fine tune some things and everything, we'll see. The January is the key. There'll be more dialed on that. But it's going to be hard to really change demand a whole lot because we just started the marketing year not too long ago, but there's anticipation. If China does come forward, they might maneuver some of that export. But it's mainly South America. They just are in the early stages of their crop development. So those South American numbers, after we get through next week, will start to change according to what they're looking for on their weather. So far, it's picture perfect for the most part, subject to change, but they're off to a good start. The good to excellent categories are up there pretty good. So we'll see what this is. And then two, Canada, Stats Canada came out. They looked at record wheat, record canola production. So world numbers probably.
And then over on the livestock side of things, Curt, how did cattle and hogs trade today?
Oh boy, it giddy up in the cattle complex. I tell you, on the daily chart, they were up $3 to $5. The feeders up $2 to $3. On the weekly chart, up $9 in the fats and $15 on the feeders. The feeders are getting back in that chart gap we left back there in October. Still watching Mexico and imports coming in from the south. Tariff news, meat imports. So it's just a rodeo here. I'd look to see if we can't regain half of what we lost here over the last month and a half. On the hogs, on the daily, they were up 40 to 50 cents. On the weekly, up $1.80. The thing about the pork, though, is usually you see some pretty big Christmas ham demand. You got to have a bargain on those hams because they're quite a bit off the highs from August. Typically, you have a rally in the ham sector going into Christmas, but it's the complete opposite. So have a ham.
Lots of great information today, Curt. For anyone who would like to get in touch for more marketing info from agmarket.net, how can they do that?
1-800-779-1515 or go to agmarket.net.
Thanks again for the information as always, Curt, and have a great weekend. We'll talk again soon.
You bet. Take care.
That again was Curt Kimmel of agmarket.net. We'll take a look at how the numbers close through the market window at iowaagnet.com. At the close, March corn down 2.5 at 4.44 3/4. January soybeans down 14 1/4 at 11.05 1/4. January soybean meal down 3.80 at 3.0740. Soybean oil down 10 cents at 51.69. Chicago wheat down 4.5 at 5.35 3/4. Kansas City hard red wheat down 2 3/4 at 5.31 1/4. Minneapolis spring wheat went unchanged at 5.73 even. March oats down 6.5 at 3.08 1/2. On the Merc, December live cattle up 5.70 at 227.15. January feeders up 2.47 at 339.05. December lean hogs up 52 cents at 81.65. Pork cutout went unchanged at 94.50, and December Class 3 milk down 11 cents at 15.99. That's been a check of the markets here on Ag Matters PM, and that also brings us to the end of today's show. You can find all of our daily ag news content on our website at iowaagnet.com. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.